So I would like to welcome everyone. My name is Lars Fontinen from whentotrade.com. Today I want to present you a strategy called combining cyclic analysis with genetic algorithms, which is one of my new inventions here. If you're familiar with my work, you know that I'm working extensively on using cyclic analysis in financial markets. And my last addition on that is to put genetic algorithms on top of that in order to stay in the flow with the dominant market vibrations here. And today I will show you how this all works out. So I've prepared a presentation here, and first of all, what do I want to present to you? It's divided into 4 parts. So the first part is about what is a genetic algorithm. So you'll get the main basic information about what is a genetic algorithm. It's a 5-minute session to make sure that everybody is familiar with the basics here. In the second part of the session then, I present how the genetic algorithm approach is implemented in the When to Trade Cycles platform. So I will guide you through the elements which I have set up in order to be able to develop your own genetic algorithm. And you will see that that's clearly one of the most state-of-the-art approaches how you can use genetic algorithms within the financial analysis. So this session takes you 20 minutes through all the details, what you can do with a genetic algorithm. And then the section 3 is one live example to use genetic algorithm and combination with cycles on the daily S&P 500 index, about 8 to 9 minutes. And in the end, we will have a 4th example, another live example, which uses combined cycles and the genetic algorithm on a 5-minute intraday E-mini futures contract, or also 9 minutes. So within total about 45 minutes, you will get a complete setup from basics of genetic algorithm, from how to use it in financial platform, up to 2 live examples on how to use it. So, and just to say front up, all these is included in the When to Trade Cycles platform, and it will be released at no additional costs at the end of this year for all current customers of my course Decoding the Hidden Market Rhythm at that time. Just to be aware, during next year, When to Trade and the product may be subject to rebranding, and the distribution logic will change because there's a required precondition next year as an authorization concept for new customers. So for this year, all customers at the end of this year of my book can be sure to get it at no additional cost. And just to be fair, I think next year the distribution logic will change because I will not be able to maintain all the requirements here. So if you're interested in the genetic algorithm module, all customers will get it at no additional cost during the year. So now let's start within our agenda point with the basics of what is a genetic algorithm.
Larry, what the heck is a genetic algorithm? Can you please explain it to me?
Genetic algorithms are good at taking huge search spaces and navigating them, looking for optimal combinations of things, solutions you might not otherwise find in a lifetime.
Wow, that sounds cool. So it is a fast optimization tactic to look for the best solution, isn't it?
No, it is not looking for the best solution. It is looking for a good and robust solution rated against fitness criteria. So it avoids local optima and searches for global fitness.
Unbelievable. Awesome. And genetic algorithms are search and optimization techniques based on Darwin's principle of natural selection. How does it work?
First, selection is the population improvement or survival of the fittest operator. It duplicates structures with higher fitnesses and deletes structures with lower fitnesses. Second, crossover results in good components of good structures combining to yield even better structures. Crossover recombines elements of good chromosomes from different genomes. And third, mutation creates new structures that are similar to current structures. With a small, pre-specified probability, mutation randomly alters each component of each structure.
Can you give me an example, please?
For example, in a financial application, a genetic algorithm may discover that one variable or component, such as price-to-earnings ratio, is a better indicator of future return than another variable, such as past return. In this case, the genetic algorithm would place more emphasis on the price-earnings variable and less on the past return variable.
And how does the algorithm work?
The genetic algorithm begins with a population of randomly generated structures, where each structure encodes a solution to the task at hand. It proceeds to evolve generations. During each generation, the genetic algorithm improves the structures in its current population by performing selection, followed by crossover, followed by mutation.
What is the benefit of that?
Genetic algorithms differ from traditional search and optimization methods in 3 significant points. First, they search parallel from a population of points. Therefore, it has the ability to avoid being trapped in local optimal solution like traditional methods. Second, genetic algorithms work on the chromosome, which is an encoded version of potential solutions parameters, rather than optimizing the parameters themselves. And third, genetic algorithms use fitness score, which is obtained from objective functions, without other artificial over-engineered black box mathematics.
And how do we detect the right solution in the end?
The user typically chooses the best structure of the last population as the final solution.
Why do you think this is important on financial markets?
Because the rules do not stay fixed, a good strategy which might work today might not work tomorrow.
Come on! I know that. What is your point?
The genetic algorithm follows this logic and evolves a set of given strategies against the current market condition. So the overall master genome morphs with the market. Instead of staying fixed, the genetic algorithm uses the same logic of natural law as our species use to survive in a continuously changing environment.
Wow! Now I got it. That's awesome. But please tell me why you put cycles into the mix.
That's my new invention here. Markets are driven by cycles, we are all aware of that. However, the cycles are not static and don't stay fixed. Therefore we need a method to follow. The dominant market vibration. Current approaches from digital signal processing only analyze the past. The genetic algorithm combined with the theory of cycles leads to a new way.
Wow! Now I am really interested. I would love to see more.
So now I want to give you an overview about how the genetic algorithm idea has been implemented in the When to Trade Cycles platform. So we see here the When to Trade Cycles platform module with the standard chart here shown on the screen, and we will have a new menu function here which is called genetic algorithm, and here we can see the full new genetic algorithm module, which I will open now. So it's a complete standalone program, so we can pop up here as just single application here. So the genetic engineering consists of several steps seen here above, which I will take you through during the next minutes here. So first of all, it's based on the data source from the chart where we have stated the genetic engine. In our case, we have the S&P 500 daily chart. You can see here on the right, this is the world to survive in. So this is the chart we opened, and you can apply it to any chart you have opened in the When to Trade platform here. So first of all, we must define the in-sample, out-of-sample period for the world to survive in. So you can select any range you want to apply it. So first of all, it makes sense to define your in-sample period. So, and with these two points, you can define your in-sample period. So between these red lines here, this will be the in-sample period where the genetic algorithm will run on, and after this red line here, this is the out of sample period, which means that the genetic algorithm will not take into account this data here, but you will see the performance figures shown how the derived strategy would have been worked on this data, but this data has not been taken into account by detecting it. So you can just size the in sample, so this would be the in sample and out of sample period to your needs. I would recommend perhaps to use 80% of in sample and 20% of out of sample period. However, you can design it how you like it. You can set some individual parameter, but you don't have to tackle on that. So this is just the environment setup. After that, we will go to the most important point. So this is where we create our genetic or genomes, and therefore it's important to understand how this has been implemented here in this platform. So how to encode the trading strategies into your genomes is one of the most important things when dealing with genetic algorithm, and this is where most of the available software platforms don't give you much freedom in doing that. So I've chosen a way to give you much more flexibility on how to implement your genetic or genome here. So each genome or population of different genome consists of 4 types of chromosomes. So there are bichromosomes, there are cell chromosomes, there are exit long chromosomes, and there are exit short chromosomes. So this is the first important point to mention. So you can apply different chromosomes for bi strategies. I will just populate the standard example here to see what I'm talking about. So for example, you define your rule or your statement. In this example, it's a crossover rule of the RSI indicator based on the close. And then we see 2 parameters here. So we have one chromosome, which means that if we detect a crossover of the RSI above certain level, we will go along the market here. So this is one chromosome, and within this chromosome we have 2 genes, and the genes are defined here on the right. So the genes define the range of values where the mutation can take place. So we don't know the length setting for the RSI, and we don't know the value where the crossover should take place, that we take a bicycle here, that we take a long position, which means we have to define our genomes, which in this case is N3 and N4. So we can look it up here. N3 has a maximum allowed value of 35 and a minimum value of 1 and a step size of 1. So and this information here is used by the mutation process afterwards. So even if the chromosome defines our rule set, the genes allow the genetic algorithm to apply crossover, mutation, and selection rules here. So, and the 4th criteria here, which is the place where the crossover might take place, it's allowed to have a level between 15 and 54 with a step size of 1. So these parameters define what the genetic algorithm can mutate. So you define the ranges of where mutation can take place afterwards. So, and you can add how much statements you want. So you can add different bichromosomes to your genetic algorithm, and one trading strategy will always consist then of 1 bichromosome. So you will then go forward with this idea for each chromosome. So the cell chromosome will also be filled by a trading statement. This is a crossover, just the other way around based on the RSI. And in addition, you have your genes, which is here N1 and 2, which is defined here on the right with the genes, and you set the ranges here. So you go forward with defining exit signals for short and long. So from a logical point of way, you think about how your buy strategies or your favorite set of indicators should be used for buy rules. You will put the statements in here. You don't need to set any parameter value. You just let the genetic algorithm find the ways how the parameters should be fed into the chromosomes here. And you go forward, you feed in your best cell statements or cell indicators here, and then you can add exit statements here, and the overall trading strategy is then derived. So this is a genome based on 1 buy, 1 sell, 1 exit long, and 1 exit short chromosome. So the overall genome consists of all 4 chromosomes, but each chromosome can be part of mutation, crossover, and selection processes, so that the trading strategy in all instances consists of all 4 chromosomes in the end. So we don't know what will be the best buy statements, sell statements, exit long or exit short strategies. You put in your rule set, or what you need to evolve in the world, and the genetic algorithm will select the parameters and chromosomes which work under the current market condition. And the good thing of the genetic algorithm is you don't have to rerun it. It does not look for the most local optimum. It evolves the current market condition and just chooses the chromosomes and parameters which fit best to the current market conditions. So you can evolve with the market here. So this is an important part to set up your genetic strategy with creating your statements for buy, sell, and exit. Then the next also very important element of a genetic algorithm is the fitness function. So the fitness function is your evolution rule set for survival of the fittest. So as I mentioned here, so we will have one genome which consists of buy, sell, exit long chromosomes. The fitness function then rates each genome based on this rule set here. And here's another big improvement which I needed to code into my platform, because most fitness functions just let you choose between the main trading trading system parameters like profitability, like a profit factor, like highest profitable percent of trades. So mainly all optimization software packages out there let you choose one standard system parameter or just 2 to rate against. But if you're familiar with how to judge trading strategies, you know that in most cases it will not make sense to run against the highest net profit or run a system to optimize against the highest profit factor. So I need the full flexibility in order to define my own evolution rule set. And in order to do that, I coded a complete inline compiler here. So you can code your individual fitness function just on your own, which give you the full control, the full flexibility of what you define as ideal fitness here. So it's an inline compiler which compiles in the platform here, and you can code every fitness you want. To do that, the platform gives you for sure all the statistics you will need to build your fitness function up. So you have all data at hand. And for example, here is a standard fitness function coded, which is one of my favorites, which means that it takes the system quality number into account. So one parameter of the fitness is the system quality number of Fontap's theory. So the higher the system quality number, the better the fitness. Point 1, point 2, I rate my systems against an ideal equity curve, which means I want constant upsloping equity curve, which then gives you the best parameters for trading. So I look for the ideal equity curve error to be as small as possible. So the second indicator is an ideal equity curve. And the third parameter is that I say, okay, the more trades I have in the systems, the better it is. And that's how the simple fitness is then calculated in the end based on these 3 factors here. So this is the standard fitness function which is included. You can even compile additional functions here as you can do this with your individual coding software. So this is the second most important point when you deal with genetic algorithms, that you have the full flexibility of defining the fitness function. So it gives you full control of your genetic algorithm. So yeah, these have been the first three steps. Set the environment, create your chromosomes, define your fitness function, and then you can start to evaluate. You just will press the run button here, or we'll just well, we can just do it here, and then the algorithm will start to run. Compile. So you see, just to give you an example, if I'm putting some wrong statements in and want to try to compile, you see that even the compile errors here are just shown to you. So you have a full compiler package here embedded into the whole platform here. So and just we start to compile. So now the fitness function compiled successfully, and then we can start to run it, and you see the inner parameters of what is happening here. So it's now the genetic algorithm is running here, and you see some snapshots from the inner engine, what has happened here, and you see the genomes arrive, and you see what's happening in there. So this is just the evolution process which then takes place, and yeah, the interesting point here then, the parents, which means you can see just after seconds after this process has been started, we see the fittest found parents, which means that the current population is re-evaluated just every seconds or every milliseconds, and it puts here the best parents, which are then used afterwards for mutation crossover and selection here. So you have all scores here from net profit, profitability, profit factor, trades, long and short trades. So you have all parameters which you need to evaluate a trading system. And in the end, and this is the last and most important point, you will have a look at the top 10 of the latest population. For sure, you need to run it some minutes to tweak out some trading strategies. Afterwards, you will go to the top 10 to evaluate the top 10 genomes of your final population, which is currently running. And now the most important thing is that you need to evaluate the latest population on your own based on your all system figures which you need. So the system here gives you net profit, the profitability, the profit factor, the trades, the expectancy score, the long trades, the short trades, the system quality number, the ideal equity curve error. And then you can browse these statistics by just clicking at the line which is in your interest here. And when you click on it, you see that at the lower end you see the equity curve, so you can derive just distant data. You see just one system which was detected just after seconds of this has been run, and on the right side you see the script. So we choose the crossover RZ, and you see here the parameters now which belong to this trading system here from the equity curve. The red line indicates where we have the switch between the in-sample period, which is here on the left side, and this shows the trading performance on the out-of-sample period, which gives you an important indicator of how it would have performed on the out-of-sample data here. So you can rate this against the market. Here you see the S&P, and the blue line is the equity curve. Here you see that our system trades the market quite equal to the market behavior with this system, which has been found just 5 seconds after I've started the analysis here. So then you will find for sure each system figures you will need for your ratings. So you have all statistic data at hand, like the period, the number of trades, and you can compare in-sample statistics like percent profitable with the out-of-sample statistic and the overall statistics. So you get all systems data you need to work on and compare it. You even have the complete trade log, so you have all trades at hand. So you can copy the trades to your Excel spreadsheet and even analyze. You have a simulated account equity You can see how a simulated account would have performed based on this strategy. So you have almost all data available just to analyze this. And the best of it, it's running in parallel. So while you are scanning the current population, the evaluation process is still going on in the background. So you don't need to wait until the calculation is finished. You can look at the top 10 population at any time during the process. So you don't need to wait for hours. You can just click on the top 10 population just after 5 seconds the system has run, as I did it here live. So, and this is a very interesting point, because of most other optimization techniques, you need to wait until they have finished. You don't need to wait here. You can just see and observe how the population behaves just after seconds. And for sure, this works all in parallel, so you can have let run the genetic algorithm in the background and just start working with the charts. So the complete platform is still working, and you will not be forced to wait until some other things are finished. So it's just running, and you will just be able to put it in the foreground, and then you can see how the species evolve during time. So I wanted to show you how I implemented the genetic engineering in my When2Trade platform. And to sum it up, I think it's the most flexible way that you are able to create your own chromosomes, build your fitness function, start the evaluation process, and monitor the top 10 out of the population here, which all data you need to set up your buy and sell scripts here. After you've found your main scripts, you will be able, because if you then move on to trading, there are other tools implemented, so you can set up alerts based on your trading strategies which have been defined by the genetic algorithm. So this is how it's implemented. I think now it would be more interesting to have a look at some real examples. Okay, let's review one genetic evolution system example here. So first of all, our trading genome population is defined. We want long entry signals based on a cycle with a length between 20 or 100 bars. And we add a long exit signal based on the technical market conditions. So if we have an overbought market, we want to close existing in long trades, which means we choose a technical market condition based, for example, here on the RSI indicator with an unknown length setting as a value here. So, and in addition to that, the short entry, we use an additional cycle with a length between 20 and 100 bars, same as the long entry signal here. And in addition to that, we add a short exit strategy based, in addition to that, also on a technical market condition based on the RFE with a different length setting and a value for a crossover here. So our trading system we want to use here is based on the population with a cycle to go long and another cycle to go short. The cycle length is not known here, so we detect the cycle length based on the genetic algorithm here, and we will close our long trades here based on the technical market condition, which means that the length setting for the RSI and the value which is used for crossover is also not known and will be detected by the genetic algorithm. So same for the short signal here. All these values will be now fed into a genome with chromosomes and genes, and the genes will be mutated based on the values and the range we set here. So in addition to that, our evolution rule set for the survival of the fittest, we use the following. We want a constant upsloping equity curve. In addition to that, we favor the highest system quality number, SQN, based on favored systems number. And the more trades, the better. So we want a minimum trade of 20 trades here. Everything below 20 will not be counted. If we see the system example here, that you can combine every cycle with every exit strategy for the RSI based on these two values, and combine this with any short entry signal, and combine any short entry signal with any technical market condition here, we will get a total search space of over 7 billion possible genomes. So this population we defined here gives us a search space of over 7 billion possible systems. If you take into account a computer maybe use 100 milliseconds to evaluate each systems for the last 15 years, which is quite fast, then you will need 23 years of computer power to calculate all 7 billion systems with a brute force algorithm. So just keep in mind, you will use around 23 years to calculate each possible systems, which for sure in our trading world is not possible here. So that's the feature where the genetic algorithm comes in. So yeah, let's look how these genetic algorithm will be used with the Cycles platform here. So first of all, we use the S&P 500 daily index here. For around the last 10 years, we define the in-sample period in the range of 2005 up to January, March 2012. So this is the in-sample period, which means that the genetic algorithm uses this area here to evolve the parameters here. We have an out-sample period, so the out-of-sample period starts in the beginning of 2012 up to today, November 2013. So we can evaluate how this system would have been performed in this time frame here, and this time frame is not used to optimize or detect the genetic algorithm here. So we created our genome based on our definitions here. Just to review, for the bi chromosome, we entered cycle length here because the cycle length and the phase will be detected by the genes which are put in here. The cell chromosome is also a cycle where the length is not known, so the length will be detected by the gene, which are mutated and crossover engines here. And the exit long strategy is based on the crossover of an unknown value for as I with an unknown length setting. So the length setting and the value will be also detected via genes and the mutation. And the exit short strategy, we see the crossover strategy of the RSI, again with an unknown length setting and a value which is not known so far. So these is feed in as our population here. So we create the genome and the population here, and then our fitness criteria are defined that we want the system quality number to be as high as possible. If the trades count is below 20, we will penalize the system quality number. We want an ideal equity curve, so which means here the better the lower the error, the better the fitness here. And the higher the trade count, the better the value. So we get a total fitness evaluation here based on these three parameters here. With a simple individual fitness here. So, and just to see how the genetic algorithm works, just after around 4 to 5 minutes, I stopped the algorithm about 4 or 5 minutes after running it. So keep in mind, we calculated that we would need 23 years to calculate each of the 7 billion possible systems here. So by running the genetic algorithm, we have found interesting system combinations here with a net profit above around 1,000 S&P index points, profitability score about 70%, profit factor trades around 100 trades, and with the system quality number, between 2 and 3, which are great values if you evaluate trading systems. So we can stop our genetic evolution process just after 5 minutes, and then we will move on to the top 10 systems found here. So now we will review the equity curve based on the found systems here. So we can browse it. What you see here is the in-sample period up to the red line, and after the red line we see the out-of-sample period. So now it's important to browse the top 10 and to look for genomes which have also been worked out in the out-of-sample period. So I will browse the found systems here, the top 10 systems here, and you see just the top 4 is a very interesting candidate here. We have a constant upsloping equity curve, and even the out of sample period looks like the same in the in sample period. So this is the very valid and very stable signal here. So let's move over to the systems. You see the scripts here are directly printed to the screen, the buy script, the sell script, the exit script here, and now you can just analyze this trading here against the S&P. So this would be our trading the S&P based on the genetic script with the cycles here, and this is the real behavior of the S&P. So you see nice outperformance and upsloping equity curve. We have the trade log and the system statistics here for the in sample out sample. We have percent profitable of around 70%. Yeah, we have a profit factor of 2.3, and we have system quality number with 26.9. Even the in sample and out of sample period look quite stable and so. So this is an interesting system found here. Then you can plot it on the chart. So this is just the chart with the cycles detected here, and now you can see how the trades are shown on the chart here with the buy, sell, exit, buy, sell. So this is the complete out of sample period, which has not been taken into account into this evaluation here. So this is just one example to show that the genetic algorithm is able to detect very robust and solid trading strategies in about 5 minutes out of a total search space of over 7 billion possible system counts here. So this is just one example on the daily chart, which you can review here. Okay, let's review another genetic evolution example here. Now we use system, we use E-mini S&P 500 futures contract on an intraday chart. We use a 5-minute intraday chart for the mini futures here. So in this case, we will have a trading genome population for long entries. In this case, we use a 2-cycle composite to go along, which means that we use the low of a 2-cycle composite to enter long trades here. So the first cycle which is used has a length between 80 and 160 bars and has a variable fast, and the second cycle is a shorter term cycle between 40 and 100 bars with in addition and also variable fast. So the genes are allowed to mutate between these levels here. So this is our long entry based on the composite. Our exit is in addition based on the technical market condition, and we use a MACD signal crossover with variable parameters. So length settings for the signal line and the normal line are just variable and not fixed here in this case. So we use a static cycle composite to enter the trades and the technical market condition to exit our trades if we have overbought market situations for long trades. So a short entry, we use another 2-cycle composite. So again, we use a long-term cycle here between 80 and 160 bars with variable fast, and the shorter term cycle in addition on top of that. So the short entry composite means that the tops of these 2-cycle composite will be used to go short the market, and the same here. So we use the short exit signal by the technical market condition on the MACD with signal crossover and variable parameters, which means the genetic algorithm will mutate and cross over the genes of the variables of the MACD to find oversold markets and then exit short signals here. So this is our trading outline, and the evolution parameter are that we are looking for constant upsloping equity curve, high system quality number, and the more trades the better. So we use this for the intraday chart on the 5-minute bars here. So based on the 2-cycle composite, which can mutate between 80 and 160 plus variable fast plus a second cycle between 40 and 100 plus a variable fast, which can be combined with an MACD signal crossover with variable parameters, which can be combined with another 2-cycle composite with variable phase, which can be combined with any short exit signal with a MACD in addition on that. So that means we're talking about a search space here of, please see this number here, over 44 quadrillion possible systems, which means that we have a quite huge search space based on these, in the end, quite simple trading strategy, but based on the possible parameters which can be used and can be combined with any other parameter here, we get over 44 quadrillion systems. If you get then put on the table that you will need about 100 milliseconds to calculate each system here, you will need approximately 141 million years to calculate each system combination via a brute force algorithm. So you can quite easily see you will not be able to calculate each possible combination of parameters with a classical brute force algorithm here. So I mean, if you want to prepare for your trading day, you can't wait 141 million years to come out with the perhaps optimal combination here. So let's review what our genetic algorithm can help us here. So first of all, this is the situation. So on the left side of the blue line here, we see the in-sample period. So this is the 5-minute bar of the E-mini futures from October the 8th up to November. So this is the actual last 3 trading weeks on a 5-minute chart. You see that it's quite interesting here, the situation that the in-sample period has a constant upsloping market. So we have been in an uptrend, and the out-of-sample period we're using here is a downtrend. So the market shifted right at the point where we switched from the in-sample to the out-sample period, which means that the genetic algorithm is only using this data here to let the genetic evolution run. So, and it will be quite interesting if the genome, which is found on the left side here, how it will work in our out-of-sample period here. So let's have a look at the genetic algorithm here. First of all, we see from the environment that the out-of-sample starts at the 29th of October, which means that the 29th of October is here. So the last 3 days of trading on the 5-minute bars are the out-of-sample, and the last 2.5 weeks are the in-sample period here. 5-minute bars. So the genome here is created. You see that the buy signals is based on cycle 1 and cycle 2, which are added. So this is the 2-cycle composite, and the length parameter here and here are based here on the gen. So this can be between 80 and 160, and the second cycle here between 40 and 100. So these are just added, and the turns are just referenced here. So this is the buy 2-cycle composite, this is the sell 2-cycle composite, and the exit signal is based on the crossover on the MACD, where you see here the variable parameters here and here can fluctuate between 8 and 16 and 16 and 33 based on the mutation of the genes. So we don't know what will be the good parameters here, so we will let the genetic evolution find the best parameters based on this situation here. So the fitness function, as mentioned before, we just want to have high system quality number here and an ideal equity curve, which means that the error should be quite low, and the more trades the better. So our fitness is calculated based on these 3 values here. It's quite a simple fitness function, but that's what we want to see here. So I've just run this analysis here. Keep in mind that we have 44 quadrillion possible system, and you see here just after, let's say 30 minutes to 90 minutes, we see that the net profit stabilized and the profitability of these systems came quite close. So I stopped this analysis just after 2 hours of letting the evolutionary process run. So let's review our top 10, which have been tweaked out here. So this is the top 10 list. Let's start with the first one. Let's review the equity curve. You see here the net profit, so it's around 100 S&P E-mini points in the in-sample period for the 2 to 3 weeks, which is quite a good score. Profitable percent is around 70%. We have around 40 trades, so we have over 2 points on average. and the system quality number is quite in a range between 3 and 4, which looks quite good here. So now if we have a look at the equity curve here, so let's browse it, you see that we have a quite stable upsloping equity curve. This is the in-sample period here, and on the right side, so the red line indicates here that it shifted, so this is the out of sample period. So this is how it would look like if you would have traded the system after the analysis. So these data has not been taken into account, so this was trading blindly here. So let's browse the systems here. You can see that the equity curve is adapting itself. So you see here that the top 5 are quite stable here in this case. Yeah, and let's say so this one here, I mean, you won't find any better trading curve here. So there, here you can see the power of how you design the fitness function, and instead of letting the evolution run against profitability or whatever, it's more interesting to have a stable equity curve. So here, as you can see, we have quite upsloping equity curve, and the interesting point here to mention it that the equity curve has an upsloping equity curve just in the out of sample period. So just after the analysis, the system just went quite with the same slope upwards here. So, and keep in mind, as I mentioned here, it's quite interesting because the market behavior shifted. So in the out of sample periods, the market turned down, so in the downtrend, and yeah, the genome or the trading system, which has been tweaked out, has been stable. So even in the upsloping uptrend in sample period where the data was gathered, so but we can observe the same performance then afterward in this out of sample period with just this year. So let's review some system facts here. So in the in sample period we have percent profitable of 80%. The out of sample period is quite the same figure here, so which means it's quite stable in the in sample and out of sample period. In the overall period, yeah, we have an yeah, expectancy of over 2 points per trade, and in total, yeah, this strategy traded over 100 e-mini system points in about 3 weeks, which means it gave you around 30 points, 30 e-mini points per week, which is quite a high number. So yeah, this is quite an interesting system. And you see here on the right the scripts, so the buy script, the sell script with the cycle numbers, which have been detected by the genetic engineering, and the MACD parameters for the exit long and the exit short signal are plotted here. So you can directly put this here into your alert. So it's quite simple to put this in live trading mode, and the out of sample period shows here. And just keep in mind that this has been tweaked out after around 60 minutes after the evolution has started. So, and this is quite interesting. So before you prepare your intraday trading day, or just wake up, take your coffee, let the genetic algorithm just scan your favorite trading rules, and you see here that it's we analyzed the search space of over 44 quadrillion of possible systems here, and yeah, here just around about 60 minutes gave us this interesting data here. So this was just another example to show you the power how to search a large search space with the genetic algorithm. So let me give you a brief summary of what you've seen so far. We've started with the general information of what genetic algorithms are. I've shown you how this feature has been implemented in the Cycles platform, and in the end you have now seen 2 live examples on how to combine cycles and classical indicators within the genetic algorithm platform here. So finally, the genetic algorithm within the When to Trade Cycles platform allows you navigating through a large search space within minutes. It adapts trading strategies to current market condition based on rules of natural evolution. It does not strive for local optima, it looks for the global optimum of your trading strategies. In addition to that, the way it is implemented, it gives you full control and flexibility how to code the chromosome and fitness function on your own. You will get a complete new way to use the genetic algorithm to detect the current market vibration, which is also called the dominant market cycle. And finally, the evolutionary process of the genetic algorithm allows to stay in sync with the dynamic shifting of cycles by evolving the population, which puts another quite nice feature onto the cycles toolset, because this was just one missing link in how to detect the dominant market cycles and stay in sync with the shifting of cycles. So thanks for taking the time with me. This will be my Christmas present within the When to Trade platform during the December of this year. This will go out as a new feature in the When to Trade Cycles platform. And if you want to join, you're welcome to my course, Still Coding the Rhythm, Market Rhythm, to join. Thanks for your time.